Welcome to Renewable Energy Investments. So it's been a while since I've posted a video, and well, that's because I've pretty much pressed pause on buying stocks right now. The 2021 stock market has been pretty wild this year. As the market and large cap stocks in general continue climbing beyond all-time highs, many renewable energy growth stocks and small cap stocks are getting jackhammered up and down due to uncertain inflation expectations and the Delta variant. Now, with all this uncertainty, I'm pretty happy to just sit on the sideline waiting for a fat pitch, especially because I'm already invested pretty heavily from plowing tons of capital into the market during 2020. About that fat pitch. Just because I'm not buying doesn't mean I'm not researching and scheming on my next buys. In this video, I'll be sharing 4 of the stocks that I will be following very closely in the back half of 2021 that I think could get pretty dang interesting. I'll discuss why each is so interesting and what I'll be looking for. Quick reminder, I'm not a financial advisor and never give financial advice, so please make sure you're doing your own research. With that, let's get right into it. Stock number 1. This $10 stock will be of no surprise to those who have watched my previous 2 videos. That's right, we're talking about Renewable stock, ticker RMGB. So I'm currently holding close to 200 shares of this stock and another 1,700 warrants. Okay, so Renew's SPAC business combination is scheduled to close early in Q3 2021. It's coming up very soon. And I think we may see a sizable move either up or down very soon after the business combination. To the upside, I would not be surprised if this stock behaves similar to MP Materials when it went public. If you remember, MP was trading right around $10 up until the business combination occurred. And then it began running, and it hasn't looked back ever since. It is odd, but some SPACs pop after the combination instead of upon the target announcement. Here, Renew isn't the sexiest company to draw in retail to pump up the stock price. However, I think there is a possibility that certain institutional investors that are not allowed to purchase pre-IPO companies could decide to enter Renew Power after its IPO. Many institutions have strict ESG investing mandates, and Renew Power may be just the type of company that they would look to add, and if they do, the stock could start to run. On the other hand, $10 per share is the floor price for SPACs up until the merger because investors have the option to redeem their $10 investment for cash instead of stock upon the merger. So if this stock really is a dog, after the merger closes, the floor will fall out, which could mean that Renew's stock price could fall far and fast. We'll just have to wait and see what happens, but whether it moves up or down, it should be pretty dang interesting. For me, I plan to hold Renew Power long term, regardless of how the stock behaves right after the merger. There are not many opportunities that retail investors have to buy into a country's leading power and utility company pre-IPO at the same price as large institutions like Goldman Sachs, the Canada Pension Plan Investment Board, BlackRock, and Chamath Palihapitiya. So I'm not letting this rare opportunity slip past me. I see too much potential for Renew Power to be the dominant, vertically integrated, innovative, high-growth renewable energy company of India. Moving along to stock number 2. This is a stock I haven't covered in over a year, but I have to admit, I have a feeling this stock could start moving big in the back half of 2021 or 2022. We're talking about Beyond Meat stock. I currently hold a little under 200 shares of Beyond Meat, which I picked up during the March 2020 sell-off. Now, there are 2 main reasons why this stock is back on my mind. First of all, Beyond Meat's high-margin restaurant sales should be returning. As you may be aware, during the pandemic, Beyond Meat shifted its business model from focusing on high-margin restaurant sales to bulk package, low-margin grocery sales. Instead of Beyond Burgers selling for $15 at a sports game, people were picking up value packs from their local Costco. As the restaurant sales return, so should Beyond Meat's high-margin restaurant sales. Second, as Cathie Wood says, the longer the base, the bigger the breakout. As you can see, Beyond Meat has been range-bound since it IPO'd over 2 years ago. Meanwhile, sales have been growing rapidly each and every year. Beyond Meat has landed big-time deals, even with the biggest player in the game, McDonald's. On top of that, Beyond continues to innovate by introducing new products like the Beyond Chicken, improving the taste and nutrition of its existing products, and expanding internationally into Europe and China. Let's just say that as Beyond Meat continues to innovate, expand, drive down costs, and re-ups on its higher margin restaurant sales, I'll be looking for this stock's big breakout. Before we get into the next couple of stocks, let me know in that comment section below, what stocks are on your watch list for the back half of 2021? And if you're enjoying the video, consider helping out the channel by hitting that thumbs up button. Moving along to stock number 3, and it's Tesla stock. By now, you'll probably know how big of a fan I am of Tesla, and that I hold a pretty large percent of my portfolio in Tesla stock. I pretty much mention Tesla in every multi-stock video, so I'll keep it quick. This time around, I'll be keeping my eye on 2 key metrics that have the power to help Tesla break above the $800 to $900 barrier. First, we have the 4680 cell production. If Tesla is able to rapidly ramp its 4680 line, I think Tesla stock will hit the next level. This will unlock new products like the Semi and Cybertruck, but that's not why I'm excited. The more 4680s that go into Tesla's vehicles, the more lithium iron phosphate cells Tesla can allocate to its energy storage business. And I believe demand for Tesla energy storage is practically unlimited. The amount of batteries that need to come online over the next decade for energy storage is mind-boggling. And while Wall Street underappreciates the energy side of Tesla's business, Tesla Energy will quietly blossom into an absolute goldmine of snowballing recurring revenues. 5 to 10 years from now, when Tesla is collecting recurring revenues from years and years worth of battery deployments, even Wall Street will be forced to wake up. Second, we have Tesla's full self-driving technology. Not much to say here, except I'll be watching YouTube videos and following social media full self-driving posts very closely to stay on top of the rate of autopilot's improvements. If we see the pace of Tesla's neural network improvements begin to accelerate, let's just say I'll be putting the finishing touches on my Tesla position long before the March of Nines to full self-driving autopilot is complete. Moving along to stock number 4, which is Meyer Burger stock, a European penny stock that trades under the ticker symbol MYBUF. Those who follow the channel will know I opened a position in this penny stock back in mid-2020. Because it is a high-risk, high-reward penny stock, I kept my position pretty small. I currently hold just over 6,000 shares, valued at just over $3,500, and we're up about 100% since opening the position. Despite my small position, I'm watching this company super closely because it is entering an absolutely critical time as it begins production and sales of its new hyper-efficient solar panels. In fact, Meyer Burger began shipping its brand new solar modules this July. Okay, so as you'll recall, Meyer Burger switched its business model from selling manufacturing machines to other solar panel manufacturers to keeping its latest and greatest manufacturing machines all to itself and moving downstream to manufacturing solar panels itself. It made the move because it believes its new technology will allow it to manufacture better performing solar panels at very cheap costs when compared to the competition. According to Meyer Burger, its heterojunction-based solar cells have the advantage over conventional cells that they can convert more sunlight into energy. The smart wire cell interconnection technology, developed and patented by Meyer Burger in Switzerland, further increases efficiency of the modules and ensures them an above-average lifetime. Furthermore, Meyer Burger modules are completely lead-free compared to competitive products. The modules can be recycled in line with the circular economy. And well, recently, some third parties have vouched for the superiority of Meyer Burger's solar panels. According to a Fraunhofer report, Meyer Burger's heterojunction and smart wire technology gives it a lead of at least 3 years over the competition. Now, armed with its new solar panels, Meyer Burger is officially in growth mode, bringing multiple factories online, ramping production, and raising plenty of debt and equity capital to facilitate its growth. According to Meyer Burger, for the first time in the history of the solar industry, we have an underlying technology that delivers the highest performance and offers competitive manufacturing costs at the same time. Therefore, it is our ambition to become the European leader and a global player in the manufacturing of highly efficient cells and modules targeting gigawatt scale midterm, says CEO Gunter Erfurt. I'll be watching this critical juncture for Meyer Burger very closely to confirm a few items. Can Meyer Burger execute its strategy to rapidly scale its manufacturing of solar cells and solar panels? Will demand outpace supply? Will Meyer Burger's margins substantiate the claim that Meyer Burger is indeed manufacturing a superior product at low costs? And finally, can the value of Meyer Burger's business grow faster than Meyer Burger dilutes its shareholders with equity issuances? If Meyer Burger can check all these boxes, I think the stock will be in for quite an exceptional run. Well, that's it for today's video. Remember, let me know what stocks are on your watch list for the back half of 2021. I'd love some fresh new ideas to look into. Thanks for watching, and good day to all.